Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Today we have episode number 26, which is a stock this time, Apple. If you aren't familiar with the series, don't worry, I'll make sure to attach the entire playlist, which includes all the videos by order, in the description below. So let's do it. For those who already know, it's kind of boring, but I have to do it every single time. We always start from the higher time frames, what we call our rejection time frames, weekly and daily, to know where we stand in the market. Are we overall bullish, bearish, or stuck inside a range, right? And as price approaches the lower bound or our support area, it can be horizontal, just like this one, or non-horizontal, just like these two. We'll be looking for buy setups. And as price approaches the upper bound, it can also be horizontal or non-horizontal. We'll be looking for sell setups. And we have three types of rejection. The first one is a typical support and resistance, where we have many failed attempts to break above or below a certain level or area. The second one is a demand or a supply. So when we have a demand area, when we have an aggressive movement outward from it, in parallel, we have a supply area when we have an aggressive movement downward from it. The third type of rejection is a non-horizontal support and resistance, or what we call a trend line. So let's start by drawing our horizontal support and resistance. And as I mentioned previously in many episodes, that sometimes when you are trading or analyzing a stock or crypto instrument, you might not find a lot of support and resistance because we don't have enough data if you look on the left, or because like the price is going in one direction like for a long period of time. So when it comes to Forex, you will always find typical support and resistance because like we have a big range. No matter how much you zoom out to weekly or daily time frame, you will be able to find typical ones. But when it comes to stocks and crypto, like you might not find many support and resistance. That's why we always go for round numbers. But of course, it has to make sense. For example, Apple is trading between 30 in this particular chart and 200. So the strongest round numbers are, of course, 50, 100, 150, and 200, right? So let's draw it real quick. That's our 50. That's our 100. Here we go. Our 150. And I'll keep them all in blue to make the process faster, and 200, right? So as price approaches the 150, it would act as a strong support zone, right? Because we don't have typical support and resistance. And of course, you can always go to the previous highs. For example, here we had a high, which is broken upward. It's acting as a short-term potential support because it was acting as price rejected it previously, so it was acting as a resistance. So if we are going to apply the same logic now, we can see that we've got one here. As one price broke it upward, it was turned into a support area, and for now price lately broke above this one, so it's now acting as a potential short-term support area. So as price approaches this previous high, we'll be looking for buy setups. But anyway, I will not consider it for now because it's not as strong as a typical rejection zone. That's the first one. So now we are done with our support and resistance. Let's go for supply and demand zones. If you zoom a little bit, we can see it better even from daily time frame. We can see that we've got an aggressive movement upward from here, just like here previously. So we got a demand zone here, which is still fresh, and we also have a demand zone here, which is also still fresh. But I will not draw it. So I usually draw it like this as an entire zone, but I will not draw it for now because we already have the 150. That's how you keep your chart as clean as possible. So we know that the 150 is not only the previous high, which we saw from weekly time frame, which is this one, but also a demand zone from daily time frame and the previous high, which we saw here, right? So we are overall bullish, right? And we can see it even better if we draw a trend line, right? Which is engulfing the overall movement upward. So let's make it in brown as usual for my long-term trend lines. I'll make it appear on lower time frames. Here we go. And we'll try always to make an offset for it, right? And we can see that it's slightly broken from around this area. So it's no longer acting as a horizontal resistance as price like broken upward. So let's try to make it a little bit higher. Here we go. In a way that it's not broken. So now we have like a rising broadening wedge, but we can also call it a channel, right? So the price is trading inside this channel, making an impulse correction, another impulse, and we are currently in a correction phase. When we are in overall bullish, we're waiting for the correction to be about to end to catch the next impulse, right? But we can't really know where the correction will end. It can end here, here, or even dive deeper. That's why we don't buy blindly. Even though we are overall bullish, we always wait for extra confirmation. So the bulls are still in control. As you clearly see, I don't need to compare the highs and the lows, but if you were to compare it, we are making higher highs and higher lows, right? And now we're expecting, because we have a high, higher high, higher high, and higher low. So now we had our higher high. Now we're expecting a higher low. Unless, of course, so now we are bullish, looking for buy setups around a rejection zone. So we're looking for buy setups on lower time frames, which we will zoom in a bit. Unless, of course, we have an aggressive movement downward below the rejection areas, which is the previous high, demand, trend line, and 150. So now the bears are proving to us they are taking over, breaking all possible rejection zones. Then and only then when this happens, like I break below 150, 140 and below the trend line, then we know that now the momentum is shifted from bullish to bearish, and we're expecting a long-term bearish move. In this case, on the retest of it, we'll be looking for sell setups. But let's take it step by step, right? We're overall bullish, looking for buy setups. As price approaches this rejection area, we'll be looking for buy setups. And as always, I insist on the word looking, because like as mentioned previously, price can still trade lower and lower before going higher, and you don't want to buy a bearish market. So we are now in a correction phase, right? Which is this movement here, which is we are in a bearish market from a medium-term perspective. But we know that from a zoomed out picture that we are overall bullish. That's why we'll be looking for buy setups, waiting for the correction to be about to end to catch the next impulse movement upward. If we zoom into daily time frame, we can see the picture even clearer. Price was overall bullish, making higher highs and higher lows, and we can see that the impulse movements are getting smaller in size, right? So this impulse, last impulse, was smaller than this one, which gives us an early alert that a potential reversal might happen. An early alert, it's not confirmed yet. And we had a big higher high, then we had a slightly like a high, slightly higher than the previous one. So it's not a big higher high, like an overextended one, just like we saw previously, which would also give us an early alert that a potential reversal might happen, but it was confirmed after a break below the previous low, which is here. And we can see it better from H4 time frame, right? So we had this low broken downward, and then we had this low broken downward from daily time frame, right? So this is an early alert from a short-term perspective, and then we had a classic retest of it, so break, retest, and then trade it lower, and then broke below this area here. So now we are bearish, waiting for the buyers to take over again. For example, I'll give you a quick one. So for example, here price approaching the lower band, broke above the previous high, and the bullish trend starts. So if we were to compare this one to this one, for now, this high is still forming. So when it forms, now we can consider it our last high. And for the bulls to take over, we need to see a break above it. And meanwhile, until this happens, until we have a break above the previous high, we would be overall bearish, and Apple can still trade lower, make a new high, and then we consider this one, just like this one previously, our last high, right? So wait for the correction to be about to end and for the bulls to take over before you enter a buy. Moreover, you can always draw a trend line. For example, we've got a trend line here, right? And I'll usually make it in red when it comes to like trigger trend lines, or that we are waiting for price to break it before buying. And we also have a channel here, which we can also, just like we did from weekly time frame, we can also make it like this. It will also be a falling broadening wedge in this particular case. Then now Apple is trading inside this, like these two red trend lines, and for the buyers to take over, we need to see a new swing high, for example, like this, or even two higher highs, sorry, two swing highs to form for it to approach the zone more. For example, we have a demand area here, as mentioned previously. Now we can see it even better. And then we can consider that this is our last high, and we can enter on its break upward. Or you can keep it as simple as just zoom into H4. Let me make these ones appear only on day. I don't want to see them on H4. Let's see if this one, oops, appears everywhere. I don't want to see it on higher time frames. And here we go. Or you can keep it as simple as possible, and on lower time frames, just wait for this high to get bigger, for it to be a valid one, and then on its break upward, you can consider that now the buyers are taking over, or even as mentioned previously, which is a better scenario, which is like it would approach the zone better. In this case, when this happens, then we'll be waiting for any bullish reverse setup, like a double bottom, for example, in this case, like the way I drew it. And here we go, to consider it our last swing high, and then we can enter a buy on its break upward. Okay, so long story short, we are overall bullish in a correction phase, approaching a rejection zone, looking for buy setups. Unless we have an aggressive break below this zone, then the momentum would be shifted from bullish to bearish. That's it for Apple. Best of luck, and I'll see you on the next episode.